It's an exciting time in the crypto market, and joining us now to discuss it is Dave Weisberger, CEO and co-founder of algorithmic crypto trading platform CoinRoutes, not algorithmic stating. No, it's not that. Welcome, Dave.
Thank you. It's great to be here.
Good seeing you. So we have a lovely chart here of Bitcoin rallying about 40% in the past 10 days. Recently hit a 9-month high above 28,000. Matrix reports that American buyers are what's driving this rally right now. What do you take here? Is it a flight to safety? What's going on?
I mean, look, let's be very clear about what's going on. Bitcoin's primary use case that people are looking at is as an alternative to fiat dollars as a store of value or preserver of wealth or increaser of wealth, if one looks at it. That's the primary use case. It trades like an option, has traded like an option for years on its own adoption, because when you do the math and you look at Bitcoin as if it achieves that goal, it would more or less be, the word demonetize is often used with regard to gold, but basically if it achieves the market cap that gold has that's related to its monetary purpose, it would be somewhere in the neighborhood of 500,000 to $1 million. And despite a few people making outrageous claims that we'll get there in 90 days, the reality is the likelihood of Bitcoin achieving that critical mass has never been higher. And the impetus behind what's going on is collapsing credibility of the fiat system, because here we go. We went from, in the space of 2 weeks, from raising rates and choking liquidity out of the system to defend the integrity of the dollar, to Janet Yellen yet last night essentially saying, listen, there are, I think some stupidly high number, 16 to 18 trillion in bank deposits. We'll backstop all of it. You're going to keep your money. And the only way to backstop that money is to print more. So, that is a very big difference, and it's a big sea change.
I mean, the odds of the Fed, of the Treasury Department and everyone printing out $16 trillion just to back up every single deposit is pretty low, unless there's like nuclear explosion somewhere, and then it needs to do this. But in the meantime, people still need to get their fiat to pay their employees and things like that. So
That's right.
I'm wondering how crypto necessarily translates to that, or is it sort of an exogenous variable, namely the Fed not raising rates as high as they would have, sort of spurring people to say, you know what, I could take a little bit more risk here. I could play the crypto markets a little more, and it's less about people using crypto for what was its intended purposes and more about its speculative purpose.
Well, let's be very clear. As long as Bitcoin continues to trade like an option, it's a speculative vehicle on what will happen. But when you look at all the underlying metrics, that probability is much higher. The market at these levels is still pricing it somewhere between 5 and 7%. So it's a very small, the market's still saying it's unlikely, yet the hash rate underlying the Bitcoin network is at an all-time high. Yet, if somebody averaged down DCA into Bitcoin, even if they started at 69,000, they would now be profitable. So, you start looking at what's going on, the number of users, the number of wallets that have held it for a very long time. You have a situation where the holders, the primary believers in Bitcoin, are not selling. Speculators buy, they sell, they move around, and new holders are coming into the market pretty much every day. We've had massive news stories that you guys have talked about that are really not reflected in the price yet. I mean, Hong Kong saying that retail investors there can buy large cap crypto is a very big deal considering where it's coming from. That's essentially an admission that from the CCP that their wealthy people are allowed to try to buy and hold crypto. Right? So that's a big deal. Fidelity opening up the ability for Americans to buy in their accounts. Bitcoin's price surging lately.
We're seeing also digital asset investment products totaling net outflows for a 6th straight week last week, according to CoinShares. So it seems that there is a bit of a spook in the markets for institutional investors. Nevertheless, what are your thoughts on, are you thinking that retail investors are the ones driving this market? And I have a follow-up to that.
Well, I mean, I think the CoinShares information is incredibly bullish, because basically what you're seeing is the normal fund flows that you would expect to be there in a FOMO, fear of missing out type rally isn't happening. What you have is slow and steady buying being met by very light selling. And essentially, if you look at the way a classic bull market bottom is formed and how bull markets are, it's the old expression is climbing a wall of worry. And the Bitcoin market seems to be climbing that wall of money, that wall of worry.
So my follow-up question to that was Balaji's Serena Vance, and he's the former CTO of Coinbase. He's betting that Bitcoin will hit $1 million in 90 days because of hyperinflation in the United States. So what are your thoughts on that?
I mean, look, it's clickbait, right? The fact is the banking system as a whole probably has a hole in its balance sheet, unrealized losses that are very close to Bitcoin's entire market cap right now. And the Fed has signaled the ability to backstop that. My personal prediction is the Fed will raise rates at the same time that they've turned the liquidity spigot on. And so the raising rates is a signal to tell people we care about, risk assets and we really want to control inflation. But the real thing that's going on under the covers is backstopping the entire banking system. And that is a very big deal because it's a sea change. I think it's the next Genesis event for Bitcoin, ready for the next stage in the rally. And I think that's what he's talking about. 90 days seems a bit extreme to me. But the truth is I would be beyond surprised, actually, if Bitcoin doesn't make another all-time high at some point in the next year and a half, or as we approach the halving, and whether or not we get to digital gold, which is the 500,000 to 1 million. I mean, I think it will get there. It might take a lot of years. It might be quick. I don't know. But the notion of hyperinflation seems a bit extreme to me, at least right now.
All right.
And in terms of
Lawrence,
I'm sorry.
One more?
No. Yeah, in terms of activity, what are you guys seeing now and as to who do you think is buying more? Is it institutional or retail?
I think, like every other bull market in crypto, it's wealthy individuals. I hate calling it retail because it's not the Aunt Minnie in Minnesota putting $500 into Bitcoin that's driving the market. It's major players, family offices, individuals with lots of money who are starting to increase its allocation back to where they were before everything started with crypto last year. I mean, understand 28 to 32 was a trading range that held for quite some time, for many, many weeks, on the way down from the all-time high. First, it jammed into the 40s. And then FTX, then it went to 28 to 32 as more and more shoes dropped. You had Luna, then you had Celsius and BlockFi, et cetera. And then FTX jammed it into the teens. FTX was clearly an overreaction because it really had nothing to do with crypto. People sold what they had to sell. And as soon as they were done with that, people started buying it back. And that's where we are now, kind of recovering back to where we were last year with much healthier fundamentals in the underlying blockchain data.
All right. Some bullish sentiment from CoinRoutes CEO Dave Weisberger. Thank you for joining us, Dave.